Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Friday, October 23rd, 2020. Just want to start off by apologizing for my absence on the site today. My doctor had called me to his office this morning and called in a flurry of lab work trying to figure out what's going on here, if this is long COVID or something else. And I had to do blood work and followed by x-rays. It's been an all-day event because those were walk-in appointments in a huge retirement area. And yeah, you don't just walk in and do blood work or x-rays, especially during snowbird season, as we call it, without a substantial wait time. So I wanted to, okay, back to the charts. I haven't had time until I just got home 15 minutes ago, glanced everything, figure I'd do a quick update. There's not a lot new to report. It's Friday. By the time I wrap this video up or shortly afterwards, the market will be closed. So let me just show you where we're at. A couple things I want to add to my recent comments. Number one, QQQ. We're in the same technical posture we were at yesterday. So again, nothing to update there. That is, we're back testing the top of this trading range we had here, the September October trading range, and that is in tone less taken out. That's a key support level. It had capped all advances. It shows even better on the NASDAQ 100 futures. All advances during that correction, and then finally we had the breakout recently, the rally, and we've been back testing. So we do have, as mentioned before, we have positive divergence. And I wanted to talk on this a little bit. A member of the site yesterday made a comment. So Randy, you're bullish. QQQ is bullish and semis are bearish. Well, let me expand on that. First of all, my job is to point out setups, developments, bullish and bearish setups, trade ideas, and there's always a potential of something, a difference of something being bullish. In other words, this is a bullish trend. And in a bullish trend, if you can find things such as a continuation pattern, like a bull flag or anything, there's various continuation patterns, that's your objective entry. Otherwise, going up, I like to buy pullbacks to support or breakouts above continuation patterns. So that's a bullish trend. The near-term trend now, since we peaked back here a week or so ago, a couple weeks ago, has been down. So the trend is bearish. QQQ is in a bearish trend. But what we have is a bullish setup, a potential bullish setup. It's these positive divergences and the fact that we had a bullish breakout, very impulsive buying, and we pulled back to support. So not to get a bullish setup confused with a bullish trend, but that's what it is. I point out bullish developments. Now, if it fails to materialize, if we break back down within the trading range by a wide margin, if we burn through these positive divergences, which are bullish on the 60-minute chart, no longer a bullish setup. The catalyst right now for a breakout. Now, I've said this many times, and it bears repeating. We have the election now, just about a week or just over a week away. So I expect whipsaw signals. It's been the norm lately. Although I can't give specific individual investment advice to anybody, I can tell you it's a good time to maybe take a little time off trading, especially if you're new to trading. If you're an active seasoned trader, you already know this. Trading around big FOMC meetings, which can go either way, whether the market's expecting a rate cut or not, or a hike. There's always volatility and whipsaws leading up to that decision. Obviously, a big presidential election like this, it can go either way. And so with that being said, in a vacuum, I'd say, oh, this is a clearly bullish setup, and I might even, suggest or add an official long trade in your two objective points. And look, the elections may be a non-event. We may rally into the elections. I suspect a sell-off leading up to it, but again, this market it's been bizarro market for a long time. When it goes up, when it should be going up, it goes down, and when it should be going down, it goes up. And a lot of that is a heavy hand of the Fed, but it's also sentiment and everything else that's going on right now. But let me just keep it very clear. Okay, in a vacuum, it is objective long entries at this pullback to support. We've had multiple objective long entries. We haven't gone anywhere yet, but a breakout, there's a well-defined downtrend line. So breakout, especially a solid impulsive breakout, would be a bullish technical event. And whether or not it fails, again, I can't guarantee that. I can tell you there's a higher chance, in my opinion, of any breakout failing, just like a breakdown back into the range could prove to be a whipsaw signal. So if you're just a purist, you want to trade the charts and not be influenced by what may or may not happen with the elections, those are your levels right there. And again, at this point in time, we're so close to that level. While I might normally say, wait for a breakout, that breakout could come on a gap up on Monday. And if it does, and it's not too big of a gap, it's still tradable. You can still take it. There's some extra levels. You can see resistance. I'm just throwing up resistance levels here. The gap right there. Those would be your first two resistance levels or potential targets, and this would be a third. Anything much beyond that, you're talking the previous highs, and we'll probably take out those highs and continue to rally. All right, so that's that. Let me show you the other board. This is a board I've been looking at a long time. Again, it's the same chart, a QQQ 60-minute time frame. It's just this other one shows that trading range a little bit better, how we're at the top of it. Let's move on to the futures, NASDAQ 100 futures. Again, this shows very well how the top of that trading range, I'm boxing in all the reactions around that level. It's these two lines has acted. So you have the same thing. You have a downtrend line, which is now better defined than the last time I talked about it. Why? Because we've had more reactions today. Like the 60-minute chart of QQQ, you have positive, aka bullish divergence. So that is a bullish setup any way you slice or dice it. Does it pan out? I can't promise that, but I can promise that, breakout. And again, take the election and all the fact that we might have whipsaws, put that aside. A breakout above there would be an objective long entry, as would a break above the 11,742-ish level right there. Potential targets already shown right here. And of course, then that previous reaction high, anything much above that, you're going to make a run at the all-time high. So there's your upside targets. And when downside targets, should this just fall apart, we enter the range, well, you can see some levels marked. And, big ones would be right here. I think this is pretty big support, especially because we had these reactions here, here, and here. That runs from about 11,667 to 11,228. A break below there brings you down to this level here, and then you're getting pretty dangerous territory if that goes with conviction. That's 10,958, give or take. It's not a hard number. I would say, give a 10-point range on it. That's a 11,000 point index, and then you have those previous lows. Anything much below that is going to open the door probably to a big wave of selling. So bullish, bearish, at this point in time, based on the technicals, I have to favor this over that, because again, everything that the technicals are showing me right there. SPY, or the S&P 500 tracking ETF, same thing. Nice clean downtrend line. I just extended it. Positive divergence at the lows. I know this chart has a lot of lines. Let me just give you the key levels to watch. There's your downtrend line. There's your divergence right there. Positive divergence. Positive divergence. You're also above the these trend indicators, which define bullish and bearish trends. When the white line, the 9 EMA, is above, that's about the negative 0.5, we'll call it. I have it at negative 0.44 on SPY. It's about the same on QQQ. Defines bullish trends when the white line is above, bearish trends when the white line is below. Okay, and then back to the point that I started out with earlier a second ago, when somebody said, kind of either confusing or is a contradictory, bullish setup on QQQ, bearish on SOXX. Well, yeah, looking at the charts now, QQQ is known as the tech index. It's not all tech, but it's about 50%, over 50% of the companies in their technology. Semiconductor stocks are a subsector of technology, but they're not all technology. In fact, they're not big tech. The big tech, Alphabet, Apple, those have so much larger market caps, and there's so much higher weighting in the index that, yeah, you can see a correction in the semis and or weakness or underperformance and see QQQ rally. And here's the 60-minute chart. I do not have anything remotely close to positive divergence. Indicators headed down. This is the PPO. The RSI is heading down. No divergence at all at this point in time. You do have a downtrend line. Now, my guess is if the Qs pop their downtrend line, semis will probably pop it as well. So, I pointed out some bearish developments on yesterday, I think it was, on the semis. The breakdown of this minor trend line, all all mostly red candles since, but we're not falling hard. And again, at this point in time, my convictions aren't high enough to add SOXX as a short, but let's see what's going on there. And again, remember that the semis, although they're a key tech sector, often considered the canary in the coal mine for the tech sector. When the semis start to roll over or have problems, that is often a precursor to bigger problems in tech overall. And it makes sense, when semi sales start going down, or orders for semiconductors. All these other tech companies, a lot of them rely on semiconductors for their business. And so that's one reason it's a canary in the coal mine. But let me show you a few things to watch today. Intel used to be the 6th largest component in the NASDAQ 100. No more. Intel has peaked. Intel peaked way back here, right after the earnings back on January 23rd. The stock is still down 31%. So here's a stock that long since peaked. It's been making these series of lower highs since then. Most recently, as pointed out, it ran into this key $56 resistance level and was checked there on a kickback rally. Must have reported. I can see the spacing. These are earnings lines. I don't know if you can see I have vertical lines here, and so I assume then again, I was out of the office all day today. You could only assume a big 11% drop, and it's a big gap down, is earnings induced. Now it's taken Intel down to support. We have I have a lot of support lines down here, but right around to the end of these recent lows. That's obviously for today. That's probably it. But here's a stock again, one of the former largest semiconductor company in the world and a leader in chips, and you can see they've just been in decline for a while now, and that doesn't bode well for the chip sector. So there it is. Intel is not every chip company, but I already went through quite a few of them the other day, and so like I said, I would be, if it was between going long QQQ or long SOXX, I think the Qs right now, from a technical perspective, they look better. And price action too. You're not seeing this on Amazon and Facebook and all that. So that's that. I just want to address that point that, at the very least, I think the semis will underperform QQQ. And what does that mean when I say something will underperform? Well, both could go up, QQQ and semis, but the semis would go up less. Or both could go down. But if the semis were to underperform, it means they would go down more than QQQ. That's what underperformance is. It doesn't just mean one not going up as much as the other. It works the other way as well. One's dropping more than the other. Other trade idea updates. Coffee, like I said, hanging in there by a thread, really pushing the lower limits of what I wanted to see. A slight undercut of that previous low, which we did, which extended the bullish divergence. And what's interesting today is look where we've stopped. That trend line that I put out here the other day continues to act as resistance. So here's a bullish falling wedge pattern. We're pushing up against it. As I always say, resistance is resistance until unless taken out. Maybe this trend line continues to act as resistance, and maybe we move lower, and maybe we burn through these divergences. But as of now, this is a bullish setup, a potential trade op. I mentioned the other day you could take a shot and as an aggressive trader there, but at this point in time, your next, the first objective buy point from here will be a breakout, especially a solid break above the downtrend line, solid 60-minute candle. The more green candles, the better, and you can see targets. I've already covered that. So really not much of a change, just an additional reaction to help validate that trend line to make it a little bit more significant. The more reactions on it, the more traders are likely to see it, and as such, if and when it's broken, then there's a bigger pool of potential buyers that may jump in and take a long position. But again, others may be looking at coffee as bearish and they're short, and they're seeing a downtrend like this, and they're using rallies into that downtrend line to short, add to their position. So it works both ways. And again, that's why you want to wait for a breakout above the trend line. Natural gas, NG. Yesterday I said we were in no man's land, and you had a next target / resistance up there at 31.3146. You don't add when a stock. I don't like to add in no man's land. I said your objective entry, if we got to pull back to the 2915 level, that would be an objective entry, and that's exactly what we had. So if you were around today when I wasn't, there was your objective entry. Nothing much, but if you trade natural gas futures, you know that even just that 3% bounce off that level, 3.11%, 5%, would put some quite a few pennies in your pocket. So congrats that caught it. Now it's still support, and we haven't made that next target yet. So the way it works is, break under that level would be bearish. So if you bought in today, added to it, or took a new position, you still want to stop a little bit below there. Natural gas is volatile. Don't put it too tight, or if you do, wait for a solid 60-minute candle. It's not unusual for natural gas to have these little whipsaws through support and resistance because it's so volatile. So I tend to use wider stops and or wait for 60-minute and sometimes even two 60-minute candles or a 120-minute candle close below by using wider stops. Yeah, when you get stopped out, you're going to get back a little more in profits, but then you're also going to stay in and not get shaken out of trades, because natural gas is a great vehicle. If you're on the right side of the trend, I mean, just look at these last two swings. From the top there, when we had that divergent high, negative divergence, that was a 38% drop, and we're talking a matter of weeks. And that's par for the course on natural gas. So this is a extremely profitable vehicle to trade. There's a 48% rally, whatever it is, and again, in a matter of weeks. But it cuts both ways. If you don't know what you're doing, this thing can eat your lunch. And so the end of the day, let me just leave it at this. I'm trying to remove that line. Bear with me. At the end of the day, I just keep my position size smaller. I don't trade as much as this as I might in Apple or SPY or Procter & Gamble. You'd use a much smaller position size, and it's worth your while, because instead of going for 10, 12, 15% swing trade, if you catch a trend in this, you're looking 30, 40, 50, 100% or more on these rallies. Finally, keep in mind, I didn't pull this chart up. Again, I just got back to the office. I'll try to cover it in the next update. But in the past, I've done a chart that shows end-of-year seasonality. And usually leading up to the end of the year, you're getting close to, December 31st, or shortly after, you typically get a rally, a seasonal rally. Remember, natural gas, as it starts to cool down, cold fronts come, you're going to have demand for natural gas. And so we're getting to that point where we could see an early, sometimes it comes early. We're right now in late October. Some of those rallies have started then, early November, or some of them start after the first of the year. So this could be the beginning of much more. And, I'm treating it that way because we are coming off, again, most importantly, a divergent low, bullish falling wedge. Breakout in the price action has been nothing but bullish since. We're in an uptrend. We took out the secondary trend line. We took out the 2915 level. We back tested it. So this would be, my expectation, a move up now to that 3146 target. Reaction there. Continue on up. And for those of you that trade ETFs or ETNs, UNG is a natural gas ETN. I've covered this quite a bit. There was your divergent low right there, comparable to the one I just showed you on the futures. And we've been stair-stepping higher, and we already hit this 1305 target. So the next target, if and when that gets taken out, and if natural gas futures does what I just outlined, I'm going to tweak that level there. That'd be your next target around 14. Okay, and the PEIX short trade idea, still unofficial, but playing out well. And I'm more comfortable with something like this. I think you're going to see less whipsaws in a stock like this than you will in the broad market. There was your breakdown yesterday. As I said, it occurred early. It didn't gap down. There was plenty of opportunity to enter. Stock closed down, dropped 13% and down again today. So another follow-through red day. Nothing big, but down another 2.85. Getting close to that first target, around $8. You want to cover a little bit above that 797 if that's your, if you want to take partial or full profits there. Otherwise, you can tuck it away and see if you can hit one of these additional targets. I wouldn't list them if I didn't think they were possible. But again, there's going to be some uncertainty coming up with the markets and everything else that goes on, especially with the elections. This one will be involved, with the big green plan. Democrats win. It's going to be good for green energy. PEIX, this is ethanol, so that's part of that whole thing is putting ethanol into fuel, cutting the gasoline with ethanol, and who knows, they maybe take it up from E10. I think most pumps here, at least in Florida, are E10. Those in the industry are obviously pushing for E15 or higher. That's the percentage of ethanol in the gasoline. So again, maybe affected by the elections, maybe not. But as of now, again, strip all that away. I can tell you that is a textbook breakdown and follow through so far. Negative divergence, so I see no reason why that at least that first target won't be hit. And PTON was another one, which, by the way, this reminds me, PEIX I picked up, that I found that one on my scans. PTON, we had several inquiries in the trading room recently, so I did a video, and I'm going to do that again. I told you guys I would follow up as I'm coming back online. I am feeling better, despite, my doctor did the test today because I'm now almost 2 months into this, but I'm trending better, and I'm spending more time in front of my desk. Well, today was an exception because I had to run around town all day. But I wanted to let you know that I'm going to spend some time. I'll try to do it this weekend and go through the chart requests from gold members that you've posted in the trading room, any opinions on stocks, and if I can't reply to you individually, which I'll do when time permits, I'll post a chart if I can, if I need to, if I have an opinion. Keep in mind, I don't always have an opinion on stock. Quite often people ask me, hey, what do you think of XYZ? I look at the chart and I can't make heads or tails of it. I don't try to force an opinion on the stock if I don't see clear levels, clear developments. But if I do have an opinion, I'm glad to share it. And I just want to let you know, be patient. I'll try to catch up on those chart requests. Over the weekend, no later than Monday if I can't get around to it. I got some things going on this weekend, so I'm going to try to see if I can get some progress done on the site later tonight. All right, I'm going to wrap it up here. I don't expect anything big into the close, any fireworks where we left it, or where we started the video at. Qs are pushing up against that resistance, but look, let me show you better on NQ. Even if we broke out, which, closely looks like we're popping above there, a breakout that occurs minutes before the close, even within the last half hour trading, whether it's the indexes or a stock, I always take with a grain of salt. You can always get last minute position squaring on especially on the indexes, and so I just wanted to say I don't read too much into a breakout that occurs in the last half hour, especially the final minutes of trading. So I can leave it here. This is going to have to be continued Monday. We'll see if we can break out or gap up above that level on Monday, or are they going to foil it and fall back down into the trading range, and then of course I'll post any updates as soon as possible if that happens. All right, this has been Randy Finney with Right Side of the Chart. You have a great weekend.